Warriors Fed Day, big day that we have ahead of us today. I want to spend some time just prepping you for a potential scenario. When I was with you Monday, I was talking about that the euro could come off. I was looking to fade dollar strength post-Fed. Post-Fed means after the Fed, after the press conference. Okay, so I'm going to let that happen. Small percentage of people think they could go 1%, but I look at the markets right now. You have S&P's up 18, you even have the euro up 28. So the market's not afraid of the 75. It's already in the market, the 0.75. We'll be paying more attention to what he says as far as his hawkishness during the press conference, and a 1% would be a surprise. So the way I'm going to approach it is, if it happens today, I'm looking at the 61.8 level as being very critical support for the euro to make the case that this was the bottom. Of course, we could stretch towards 78.6, but I'll be probing it. Of course, I'm going to be wrong under the low. So if you're going to do something, the most important thing is when you do it to say, okay, where am I wrong? And I'm wrong under this low, meaning that we don't have a low. You look at this 4 hour, we diverged here. I'm not sure if we had daily divergence on the euro. We did not. So if you believe this, it would imply that there could be another low. So even if I'm wrong on trying to buy the 61.8% correction, I'll buy new lows in the dollar. I'll get out of the way first, but at new lows, I don't think we're going to confirm. So let me just run through the rest of the currencies. Pound's really been outperforming the euro in the low 118s. It looks attractive to me. The yen's been trying to rally with the dollar, but the yen has been pretty feeble. This little 2-3 day bounce that we've had here almost looks like a continuation formation. So up here around 137, 138 could be a short, especially if we get a breakdown in the yields. And this is really going to be the key to everything, how the 10-year reacts to the Fed. As you can see, we've tested this major support quite a few times, and I've used the analogy that, if you keep testing support, it's like trying to break a door down. And the first attempt, you just hurt your shoulder. Second attempt, you notice the door is about to give. Third attempt, the hinges are starting to weaken. So if we get a close under this 273 level, yields are going to drop. That could end some of the interest rate advantages that the dollar has had. That will also be, I believe, favorable for equities, and I want to go to them right now. So when I left you Monday, I said, there could be, after a run like this, and we filled a gap here, Mike and I talked about it, that we could have 100-point pullback. Well, we almost did have 100-point pullback, and I'm not sure if this is complete. I actually think that we could get some type of pullback into the 38 to 50% level, and that would be normal. I mean, we've had a very nice run from the lows on the solstice right here, right? 36.35. So we've had 300 and call it 70 handles. So if we pulled back here and we got 37 handles, 370 handles, that would give us 41.42, which has been the long bandied about battleground area for the S&Ps. As you can see, it's even happening today. S&Ps are up 0.47. I pointed out that the Russell is outperforming, much stronger chart in the Russell than the S&P. NASDAQ's been bringing up the rear. Looking at the gold, doesn't look ready to me. I'm looking for one more low in the gold. So a lot of people say, well, if you're going to get a new low in the gold, that, maybe you'll get a new high in the dollar. That doesn't have to happen. And waiting for that. Silver too. Silver was up earlier. Still think that we're going to trade under 18, maybe 17 and a half, 17.30. And the dollar index might be able to pop up towards this 107.80, 108 level. So if you want to play the Dixie, you wait till after the Fed. Now, if it blows right to new highs during the press conference, leave it alone. We will diverge up there just like we will in the euro making a new low. But I'm going to play it that way. If you really want to know what the best buys are and sells, it's the commodity currencies. So let's say we have a Fed-induced bounce in Canada. Halfway back's about 130.20, but it's so weak, you know, maybe around the 130 level, you lean into it and maybe you put a piece on here and you're wrong over the high of the move. Canada, really, when you look at it, has really been, I know I'm going to have too many fibs on here, but I just want to stress that with a couple of days left in the month, we're almost lower on the month. And the euro has taken out this high. Canada has not. So I'd use dollar strength to sell Canada as well. And I'd use dollar strength to look for a place to buy the Aussie, maybe around 68.40 or so. Here you go, 68.40. It's threatening a breakout of this wedge. If we break out over the big round number 70, you have to go with it. Told you to buy it and hold your nose here last week. So react to the reaction, don't predict the reaction. I talked about not adding positions to what you already had from last week going into the Fed. And this could be an opportunity to, if you didn't sell the dollar at the top or buy the euro down here, that this is going to be the difference. If we could put in a higher low, and I'm looking at the 61.8 level there, but more conviction on selling rallies in Canada, buying breaks in Aussie, buying breaks in USD NOK, buy the commodity currencies and look for shorts in the yen. And that's a wrap for me. We have a lot of programming today. We have Danny Giza at 8 o'clock. He's going to be with us. He's from the SIBO. We'll be talking VIX, so tune into that. I always invite people to join us here at TradeGATEHub.com. It's powered by TradeView Markets. TradeView Markets is listed, I believe, as of yesterday, as a preferred broker at the CME, which is, you know, they do their scrutiny before you become a preferred broker. I think it's probably one of the only brokers that is outside of the U.S. that doesn't take U.S. accounts approved by a U.S. exchange. I think that speaks for itself. And want to wish everyone good hunting today. We'll be talking VIX with Danny. And the question I have for Danny is, when he gets here, is when the S&Ps were consecutively making new lows, why couldn't we ever penetrate the 38 level? So we had S&Ps, you know, consistently making lower lows, right? There's a few months, right? Lower lows, with the VIX not being able to make, take out that 38 level. So where people felt like the VIX, you know, there was something wrong with the VIX that it didn't break out. Well, maybe after this rally to 41, 4,200 in the S&Ps, if it's a failing rally, the next wave in VIX could be pretty big, because if you look at it, where is that VIX? Had you here? Here you are. Okay. So, I mean, let's go to a weekly. And in the bears, this is bear porn. Maybe we'll go to the daily. So if we break out next time over 34, with the lows being down there, you know, down in the 14 to 38, measures 24. On a breakout next time over 36, we measure 60-ish. And, you know, there were a lot of people saying that we really never had that final capitulation in the market. And if we fail from 41, 4,200, and then take out the prior lows and trade down to 3,000 S&Ps, I think you'll see the VIX explode. So be there. We're going to be talking to Danny. Mike's going to be with me. Jason's going to be with us. And in the meantime, let me remind you one last thing. Protect your capital, because the market will be here tomorrow. Make sure your equity is. Dale Pinkert from TradeGATEHub.com signing off, powered by TradeView Markets. Adios.